Oops, it is now 10:01. Welcome, everyone. Let's go ahead and get started. We'll call the meeting to order. First item of business is to approve the minutes from our last meeting.
Second.
Okay, we have a move and a second. Any discussion about them? If not, signify your approval by saying aye. Aye. Any disapprove, same sign. Hearing none. Thank you very much. Number 3, ratify approvals. There are 2 of them. Do we hear a motion?
Move the item. Second.
Okay, any questions? If not, signify your approval by saying aye. Aye. Any opposed, same sign. Hearing none. The 4th item is to approve the claims docket. And was there a claims docket with it? Mine got stuck to something. I didn't. But anyway, anyone?
Move approval.
We have move approval.
Second.
We have a second. Any discussion? If you're for it, signify by saying aye. Aye. Any opposed, same sign. Hearing none, number 4 is approved. The next one is to approve the following applications for service retirement. There are 10 of those.
Move approval.
I think we had first. Did you get those? Okay, good. Any questions or comments? Okay, if you're for that, signify by saying aye. Aye. Okay, any opposed, same sign. Hearing none, we'll go to number 6. Receive the report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to spouse. We have 2 items. What is your pleasure? Okay. We have an approval and we have a second. Any questions or comments? Okay, if you're for it, signify by saying aye. Aye. Any opposed, same sign. Hearing none, we're approved. Okay, we go to number 7. Receive report of death, authorize payment of the $5,000 benefit, and authorize the secretary to make the necessary changes to conform on the following. And there are 3 people. Your pleasure.
Second.
Okay, we have a motion and a second. Any questions, comments? If not, if for this, signify by saying aye. Aye. Any opposed, same sign. Hearing none, we will go to number 8. Approve the following application of vested rights. There's 1. Your pleasure. Any questions or comments? If for, signify by saying aye. Aye. Any opposed, same sign. Hearing none, we go to number 9. Ratify approval of the request of the following to terminate the vested rights, receive a lump sum of the employee contribution account. Your pleasure. Motion and a second. Any questions or comments? If not, signify your approval by saying aye. Aye. Any opposed, same sign. Hearing none, we will go to Jason and our investment consultant report.
Good morning, everybody.
Morning.
You should have the August monthly report in front of you. Markets continue to perform very well despite some events domestically with Hurricane Harvey and Irma. Actually, I've seen some pickup in the equity markets following those as certain sectors, expectations for growth and rising gas prices picked up some of the more energy-sensitive areas of the market. Overall, your portfolio continues to perform very well. Just looking at the asset allocation, you'll see that you're overweight in equities, 2%, as well as fixed income now. And within fixed income, it's really been the Core Plus, the Western strategy, which has a pretty significant amount of high yield in it, as spreads or interest rates for high yield versus treasuries have narrowed, pushing up high yield bond prices, making them fairly rich today. So the opportunity there isn't as robust as it had been. So one of the a takeaway from this is we just look at your cash needs. You've been taking from equities pretty consistently. I mentioned to Renee, and we'll mention it to Bob, our recommendation would be next month or so of cash needs take from the Western portfolio, as that's pretty significantly overweight. Not just as we look at fixed income's overweight, but if we look within the fixed income, Western is 70 million versus the SSGA at 21 and PAMCO at 33 and Brandywine at 48. So it represents the largest portion of your fixed income. Within equities, large cap remains overweight. It's your largest allocation. It's slightly overweight. That has been intentional for some time as your private equity is getting up to the target allocation. That said, because you've had a pretty good year in private equity in terms of distributions and price appreciation, your private equity is getting closer and closer to target at just 87 basis points below that 5%. So that's moving up as well. If we look at performance on the next page, the total fund, the trailing 1 year, the very top line on a gross basis, up 11, the 1 year column. Total portfolio is up 11.82 gross of fees and 11.18 net of fees, net of management fees, versus the policy index of 10.58. So net of all fees, you're about 60 basis points ahead of the policy benchmark. More importantly, relative to objectives, it's been a very good year. That you recognize it, 7.4? 7.4% return objective. 5 years, similar, right in line with the policy index, and you're doing things that you can't invest in. You can't invest free, so while looking at the net of fee return, we want to beat benchmarks net of fees, but you can't do what you're doing without some associated cost. Private equity, hedge funds, real estate, all of those things have an associated cost that also build in risk reduction and potential return enhancement over time. So, but 5 year numbers, very good. 10 years, that 10-year number still includes 2008. As that rolls off, that 10-year should be looking a little bit better. I think we looked at it, I wasn't here last month, but the month before, the 8-year number. So looking at that period from 2009 forward, it's been a very good period overall for equity markets and for the plan. I think you're probably over 8.5 to 9% annualized over that 8-year period. All of that said, as things look very good, our expectations going forward continue to be for more muted equity market returns and fixed income returns, as we still are in a very low interest rate environment. The global central banks have kept yields down dramatically and pumped a lot of money into the system over the last several years since the financial crisis, which has propped up asset prices. But going forward, our intermediate return expectations are still mid-single digits. So getting to your return hurdle is going to continue to be challenging as we move forward. You've done a good job of being conservative in times when times are good by moving that return assumption down. But just want to keep that in mind, that just because things have done well doesn't mean they continue to do as well. From an asset class standpoint, on a trailing 1 year basis, equity markets have done very well. Through the end of 2016, U.S. markets, both large and small cap, led the way with a value rally toward the end of the year last year, led by financials and energy. That turned around in the calendar year 2017 as value, more so energy and financials to a lesser degree, really sold off, and growth stocks outperformed pretty significantly. The bigger story year to date is that non-U.S. stocks and bonds have fairly significantly outperformed U.S. As non-U.S. markets hadn't done as well through last year and really through the last several years. And now from a currency standpoint, we've seen the dollar weaken relative to several foreign currencies that have strengthened, which has been a big positive for your non-U.S. investments, both equity and fixed income. So if we look at year-to-date numbers, your international developed is up 20%. This would be the combination of Lazard and Harding Loevner, versus large cap up 13.4 and small cap up 11. Still very good returns, but you can see a pretty big differential on that year-to-date numbers. About half of that return is coming from currency, as the dollar has weakened and foreign currencies have appreciated. Also on the fixed income side, a very good return, 7% year to date. Again, much of that is coming from the Brandywine strategy, which has fairly significant exposure to non-U.S. debt and non-U.S. currencies and yields, which has been a positive. That's the real purpose for that, provide that diversification in an environment where rates are low to potentially rising. Well, last quarter, we've actually seen 10-year Treasury yields come down and bond prices have rallied. It's a good thing for asset prices in the short term, but certainly not a good thing for a long-term investor like a pension fund, how that impacts liabilities, keeping rates so low. At some point, we would like to see rates come up a bit, although that will challenge in the short term market valuations. Real estate and real assets overall, again, even that portfolio, combination of the Morgan Stanley, the private real estate, and even commodities, surprisingly now on a one-year basis, your commodities have a positive 5% return on a trailing one-year basis. That's been additive, and really the Morgan Stanley and the opportunistic real estate have done well. So if you go down that one-year line, really everything has been a positive relative to benchmarks. So you're getting from good manager returns in a good environment, while still managing risk overall. From a manager standpoint, just one item of note, Wasatch, your emerging market small cap manager, at the end of last week, they announced that an analyst that was a co-portfolio manager on the international small cap team, so not the strategy that you're in, an ancillary strategy, left the firm. That analyst did provide some research coverage to the emerging market small cap team. So it's something that we're watching. It's not a direct impact to that team, but it is something that we're going to follow closely with that team. So all in all, portfolio performing well, markets are performing well, and your allocation certainly doing that as well. The other thing I handed out is just a notice about the education session we want to do before the conference starts, related to the long-short equity implementation options. I talked about this a little bit 2 months ago. We thought we'd do this outside of the board meeting just to spend a little bit more time on it, talking about some other ways to potentially get the same thing you're getting in equity long-short at a potentially lower cost to you. So that's going to be the Wednesday of the conference at 1 o'clock at the Artesian, which is the hotel that I think some of you are staying at. I know this year the conference there's the conference hotel, which is the Artesian, and then the conference center, which is the Chickasaw, I'm not even sure what it's called, conference center. So the main conference is at a different place. This is at the Artesian Hotel, 1 o'clock on that Wednesday. We'll probably meet for about an hour, or maybe a little bit more, and then can go over to the other conference center. Any questions on that or okay, thank you.
Thank you, Jason. Comments from the board, staff, and citizens? Renee, I have a question. In previous years, on the week before the OU Texas game, we've met on a Wednesday rather than Thursday. Is that still?
No one has made a suggestion to move it to that point because I haven't heard from anyone who's not going to be here. We usually just do that if I know a number of people aren't going to be here, to be able to move it to make sure we have a quorum. So I will verify with everybody who's going to be here, and then we'll make a decision about that day.
Okay, thank you. Anyone else have anything? If not, it is 10:15, and after our long meeting, we are adjourned. You ever walked away with one of these on?
Yes.
I did once. Yeah, you